Hi, Bill Brooks, Boulder, Colorado. How you doing? So today we're going to talk about should you file an amended tax return or not. Suppose we've discovered that we made an error and we're wondering, well, what do we do? So as usual with a lot of things, we weigh the pros and cons and decides what best is for us. So we have to look at the extenuating circumstances. The outcome usually is, do I owe or do I get money back? If we owe money, then we probably want to file an amended return right away. It doesn't mean we're going to jail if we don't, but it's best to come clean as soon as possible. If you file an amended return within weeks of submitting the original return, the IRS likely will forego the penalties. If we still owe the tax liability, then they're going to charge interest dating back to the original due date. On the other hand, if we gamble, the IRS won't detect the error. We're basically playing with fire. The penalties for oversight can be substantial. IRS has 3 years to audit our tax returns, 6 years if we've underreported our income by 25% or more, and there's no statute of limitations if fraud is involved. So if we can't pay our tax, additional tax right now, file it anyway and then negotiate an installment payment plan deal when the IRS tallies up the damages, interest and penalty. That would be penalty interest. Now, if on the other hand we have a refund coming, well, we'd want to basically move ahead, right? It's a no-brainer. What do we have to lose? Well, not that simple. Here's 2 reasons to consider before we file an amended return, even if we have a refund. First of all, it might not be worth the time or hassle if we're talking about spare change, especially after paying a tax pro for preparing the amended tax return. The cost might outweigh the tax savings. Second, we might be drawing extra attention to ourselves by submitting it for a second time. Basically, it gives the IRS a chance to view our return through a slightly different lens. It doesn't really increase our risk of audit, in my estimation, although they do have more time to look at it, don't they? So in a way, it kind of does. By the way, just a little sidebar, how long should we keep our tax records? Well, conventional wisdom holds that we should keep tax records for at least 3 years. It's the usual statute limitations for IRS review. To be on the safe side, however, we might keep them even longer. Some say up to even 10 years, especially if you have real estate holdings, promissory notes, contracts that extend for multiple years. Well, hopefully that was beneficial, and remember to give me a call should you have any questions. Have a great day. Thanks. Bye.